Hey, what's up, guys? It's of course your boy Mr. Miles, and welcome back of course to this video. And in this video, I'm going to make sure that you learn something. I'm going to teach you how to analyze the market, of course, using pure price action and ICT. And I'm also going to teach you how to understand if the big boys, the market makers, the guys who make fake moves in the market are also part of the game. So I'm going to be using NZDSD. As you can see, I have a trade on NZDSD, and I'm going to be explaining about this trade. And I'm going to be explaining a lot, guys. So stay tuned the video and keep watching the video so you don't miss most of my information. Don't forget that this video is being sponsored by FBS, one of the leading brokers. So check the description, click yourself the link, and open yourself a trading account with my link, of course, and get yourself a bonus using my link. Don't forget to leave a like, leave a comment about the video. So let's go straight and let's dive to the business right away. So one thing that I've always told you guys is you have to be very careful when you open your charts, okay? So this NZDSD, and I'm still holding this trade. And the reason why I'm still holding this trade is I closed 70% of the trades, and I'm only holding 30% of this trade because I saw that the market makers were up to something, and I'm going to teach you, I'm going to show you the secret, what they were up to and what they're really about to do, okay? So stay tuned to the video. So one thing you have to know is let's go to high time frames. Let's start with the monthly. Don't leave any time frame, my brother. Now I want you to look at the monthly time frame. I've been using the phone to show you, but now this is I thought of using a PC today. So I want you to look at this. Okay, I want you to look at this. You just look at the structure in monthly. Okay, the structure in monthly. Let me kind of zoom it. Structure in monthly. I don't know if you can see something here. I don't know if I'm the only one seeing something here. Head and shoulder, okay, but it is inverted, okay? But the most important thing that I want you to watch is this. I want you to see this candle. Look at the previous monthly candle. We had a strong bullish force. What does that imply us? The buyers are still in the market. So this is just I don't think it's a real move. I'm expecting this bearish candle to close in a bullish way. Okay, so this candle really projected that last month the buyers were so strong in the market. And what do we expect? So I expect this just to be just like a retracement. That is what I'm thinking. So let's not think, okay, we trade what we see in the market. Now let's go to weekly, okay? That is the rule of the game. Trade what you see, not what you think. Now, if you see weekly, let's go straight. I want you to see weekly. What do you see here? What is the trend? Of course, we are in a bearish trend. Lower low, lower low, lower low, lower low. Now there is something unique about this last low that I want you to pay attention. I want you to pay attention to this lower low. Let me mark this. Let me mark this. We have a lower low there. We have a lower low here. We have a lower low here. Now, we were expecting another lower low. And this bearish candle here was supposed to make for us another lower low. But there was a problem. So let me first mark the price of the other lower low, of the previous lower low. Let me mark. You mark where the candle closed. That is the point. Now, the question of the day is, why, Mr. Miles? Why is it that this candle rejected and failed to close below, to break this lower low? Why? It means that is our resistance point, in a point that the buyers are, the sellers who are pushing the price down are of course getting weaker, and the buyers are coming into the market. Now, we are going to trade along this price. We are going to trade along this price. I myself, we are going to trade along this price. Now we have marked this as resistance point. Let's go to another daily. Let's go to daily. Now, if you see daily, I hope you could see that we are having double bottom. Okay, double bottom. Now let's mark also that point. Let's do something. Let's mark it. I do mark that. Now we have marked it. So in between these are resistance points 1 and 2. Anything can happen. Price can either reverse from this resistance A or resistance B. But we ought to go to small time frame so that we try to analyze from small time frame, so that we try to make our stop loss, of course, so tight and so small so that we don't lose a lot of money. Now, the dealer knows that this is a buy, but he has been buying a lot of time. And let me show you how he has been buying the time. Now, we have been buying NZDSD. We buy, we come out. We buy 60 pips, we come out because we smell something bad. And let me show you. Let's go to H4 and you see exactly what was happening. If you see H4, the trend is about to change. The trend is about to change. Now, I want you to realize one thing, that if you've been watching my videos about order blocks, about source, and about breaker, you could see that this was a very nice implication for you to apply source. Now, let me repeat again, what is a source and what is a breaker? A breaker comes in when an order block is broken. For your information, this was our lower low. Okay, in that lower low, let me draw an order block. Let me draw an order block. It is around this point. This is an order block. Around this point, I think. Sure. You grab, then you draw. You look for the last bullish candle in that lower low. You see that? Now, I drew my order block, but this order block turned out to be a breaker. Why? Because price broke above it. When price breaks above the order block, we have a breaker. Now, in a breaker, we have two things that are necessary to happen. Price can either do this. It can either retrace back to the breaker, then move, or it can come back to the real source. A source is the bottom of the previous lower low. Why does price come back? Why is that price came back to the source? It means that there are many people who entered this trade, and you know that the dealer doesn't want to move with many people, so he has to fetch that stops, then move up. That is why price did not reverse from this point. And also he is trying to buy a lot of time. You know, there's so many impatient traders out there. Okay, and that's why I'm going to explain to you why this is happening. Why is this happening? Why is this happening? Why that price should just move like this? Why is he buying a lot of time? There are so many people that I see who are buying NZDSE. That's what I know. And that's why he's not going to move with all of you. He has to move with the few who are patient. Okay. Now you've realized one thing about this point, that price came back to the source and we had a buy at this point. Okay. You get some 60, 70 pips, and then we see a retracement. Then we close it. Now let me show you. Let me break it down. Now let's try to zoom this chart. I want you to see this. I want you to see this clearly. You could see something very funny here, that at this point we had an engulfing candle, strong bullish momentum. Again at this point we're having a strong bullish momentum and engulfing candle. Again at this point, the same thing. What is the dealer up to? What is the dealer up to? It is very true, and we already know that there is a strong bullish momentum in this market, but because there's so many buyers in the market, they have to shake and move with at least 10% or 5%, and the rest have to lose their money to the market. You get that? Now, if you go to H1, let me make it this easy. If you go to H1, you could see the same thing. I want you to see H1. Higher highs, higher highs, higher highs, then he comes back, but it's not touching the previous low. You get that? Because there are already some traders who are trapped. He's not touching the previous low, but he's forming new lows at this point. New lows. New lows. You see the new lows? New lows. New lows. So I call them primary lows because this was the main low, but he's forming another lows. Now, what is he up to? He has two things to do. He can either do the opposite to confuse you. He breaks this structure of this low, then comes to this lower low before moving up, or he just moves up from this point, depending on the number of orders in the market. So you have to learn how to read the market maker's mind. If you know how to read him, then you know how to trade in line with him. You don't just have to hold a trade. It's good to hold a trade, but also hold a trade knowing that what is he up to? He has made this type of candle. What is he up to? You get that? Because these guys move the markets according to the orders in the market also. They take a lot of them. That's why this trade would have moved up. There's so many people who are buying NZDSD. But the problem is the market maker. Okay? Now, that is why I took this trade. It is very clear that I want you to understand one thing. There are three things which are very important in trading. Number one thing, if you look at the weekly, if you zoom the weekly, you could see very well a very nice structure, very nice structure. And I want you to do one thing. Structures, if you know how to read structure, they're very important. You could see this. Very nice structure. And there is a high possibility that price has to move up. Okay, you see, you cannot manipulate these high time frames, but they will manipulate the small time frames, of course. In weekly, price will, of course, reverse. Okay. But of course, in H1, 30 minutes time frame, they will play along with you, and that's when they will manipulate you. But in this weekly, they won't manipulate. It's very hard to manipulate. Now we know the direction that yes, it's going to buy, but a few people are going to move with the trade. Now, if you can see this is a very nice structure, very nice structure. Now let's try to go to small time frames. Let's try to go to H1. I want you to look at H1. See H1, the way it has formed. H1, the same thing. I told you one thing, guys, that when you see a double bottom repeating so many times, know that he is up to something. Okay, if it's in a high time frame and he's repeating the same bottom many times or the same highs many times, then this is a very strong resistance point, that it's very hard for him to break. You understand me? So if you realize these things, then you're going to just be patient in the markets and hold your trade, or go to small time frames and look for clear entry points. Now, when you talk of entry points, entering a trade is kind of very, very unique. Everyone has got a different way of entering the trade, different strategies on how to enter the trade. Because basically me, sometimes I can use 30 minutes or H1, but I don't use any indicator in the trade. I only use pure price action, because that is what the market makers follow, and that is where the money is. Okay, there is no money in indicators. Pure price action, then you swing your trade maybe up to 100 pips, 150 pips, and you get out of there. You get that is also enough for you. So now you've seen, if you look at high time frames, they can really depict and they can really show you the direction of the market, but all you need to do is you need patience. Now you need patience, then also understanding the trend. The trend is very important, as in, if price is moving like this, lower lows, then from nowhere, he fails to break this lower low. Okay? Then again, comes back and fails to break this lower low. At this point, it's creating a very strong resistance to be easily be broken, that if this one is to be broken, then we are just going to have a spike down. A spike will only break this. A spike will only break this. So this is a very strong resistance point. If you see that, that's why before analyzing a trade, try to make sure that you understand the trend, lower lows if it's a bearish trend, of course. And also make sure, if you haven't watched my videos about, of course, knowing about order blocks, breaker, source, because they're very important and they're very relevant when you're trading Forex. Okay, so as I'm going to end this video, one thing I will end is check the link in the description. Click that link and make sure you're in my Telegram group, of course, Forex setup, so that we can either trade together, analyze the market together. And also you can check the link if you want to be part of my course. If you want to learn from my course, you want to be part of my course every month, you want to be attending my Zoom, then good for you. You can just check WhatsApp me, and then we can talk how you're going to be part of it. Okay. So for this time, let me wish you all the best, guys. And don't forget that risk management is the only way to make money in trading Forex. That's why if you master risk management, then you've mastered trading. Risk management, patience, and this type of analysis, I don't think you should be making losses in trading. Okay. Let me wish you all the best. Trading is a risky business for those who don't know how to protect their money. You have the tools to protect your money. Stop loss, your mind. Then I'll make a video next time about psychology, because so many people are complaining about it. So let me wish you all the best, guys, and have a nice time. Okay, bye.